We have our third speaker for the day, for the second session, CA Aditya Surte. He is already with us. So, जब तक ये technically adjust कर रहे हैं, I'll just give a very brief introduction about CA Aditya Surte. Of course, he is a practicing chartered accountant and he is specializing in GST advisory, litigation, audit and compliance work. He is a consultant to various corporate and non-corporate business entities on matters relating to GST. He is also a visiting faculty at the Management Development Program of Wellinkar Institute of Management, Research and Development, Matunga, Mumbai. He has received many rewards and recognitions like Best Speaker at Study Circle Meeting, Best Upcoming Speaker, and Best Paper Writer. He regularly contributes in articles in various professional forums such as GST reviews and chamber journals. With this very brief and short introduction, I request everyone to please welcome him with a huge round of applause. And of course, we'll first present him with a memento. Aditya bhai, you can continue, please. Yeah.
Good afternoon, everyone. At the outset, I wish to thank the Institute, the organizing committee, and my fellow speakers for inviting me once again to speak before this August gathering of knowledgeable members. Every time I come here and speak with all of you, I learn a thing or two, which is for me the whole idea of delivering lectures, that you get to study in depth, speak, gain knowledge and share whatever you've got. Now I was listening to the part of the earlier session, and if I'm not mistaken, this is the second or third charitable trust related seminar at which I have been invited to speak on the GST aspect. The increase in frequency of seminars and knowledge sharing sessions on the charitable trusts itself tells us the direction in which a lot of things are headed. Change is the only constant is a cliche, but almost like all other cliches, it is true. In terms of our Indian tax administration, there is another cliche: whatever is settled must be unsettled. Correct? So, from what I am seeing, the changes relating to charitable trusts and the income tax related provisions and the charity commissioner. Yes, sir, no problem. So, I think GST is much less of a problem for all of you who are, specializing in the charitable trust aspects of it. From what I see, the difficulties and challenges, which are multifold in terms of income tax and other provisions, are majority procedure related, if I'm not mistaken. Correct? Now in GST, when GST came in 2017, we've had our fair share of procedural challenges, and those who are practicing in GST very well know the kind of and the amount of procedural challenges we faced. But by and large, the procedural challenges and the machinery provisions have settled in GST now. Now in GST, we are working more towards increasing the effectiveness and efficiency of the machinery provisions. So there is no controversy that is raging like the provisions that we just saw, the procedural aspect. The things that we need to concentrate relating to GST from the perspective of charitable trusts is more of interpretative nature, whether GST is applicable at all, and the exemptions that are available. Correct? with this, so I have been given an hour, and rightly so. If somebody said over here that you need a full day seminar only on the provisions of income tax, you will need at least maybe 3 hours if you want to go really deep dive into the GST aspects, but that is a session for another day. This is a full day seminar on all the aspects of charitable trust, and so according to me, very rightly, GST has been kept for an hour because you have to cover many other aspects. So we'll cover it in the time granted to us. This is the agenda for the day. We will look at the applicability of GST. First and foremost, we need to see whether GST is applicable. We'll look at the exemption relating to charitable activities and certain other aspects which, according to me, which I found that a lot of charitable entities, these activities are being undertaken by them. So we'll look at those exemptions also. And lastly, we'll look at the impact on ITC as well as registration provisions. All right? Now coming to the applicability of GST in relation to charitable trusts, I think my earlier speaker, while speaking, mentioned something about many times he's seeing that the auditors think that TDS provisions are not applicable to charitable organizations. If you ask a layman relating to GST, whether GST is applicable to charitable institution, a layman's understanding is that GST is for business. So there is no GST on charitable entities or charitable trusts, correct? But as professionals, we know that that is not entirely true. We need to see the applicability from the perspective of the Constitution and the enactment that is before us. So Article 366(12)(a) defines GST. Goods and services tax means any tax on supply of goods or services or both, except taxes on supply of alcoholic liquor for human consumption. The word I am stressing on is supply. We all know GST is a tax on supply, correct? By its very definition, the constitutional definition. Now, under the GST law or the GST Act, the CGST Act or the Maharashtra GST Act, Section 7 covers scope of supply, and it's an inclusive definition. It says supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. First and foremost, all of us are, I don't think anybody is completely detached from GST. Any part of practice that we are doing, somewhere we are intersecting GST, so everybody knows what GST is. The most common and popular comment is GST mein to sab included hai. Correct? So supply definition includes everything. To a large extent it is true, not entirely. However, that is the intention with which the government has been operating. There are a lot of controversies that are going on unrelated to charitable activities, which we can discuss, but supply is not the subject for the day. So basically, we will move ahead understanding that the scope of supply is actually very wide. They have tried to cover all of it: sale, transfer, barter, exchange, license, rental, everything. All right. The three words that we are stressing on and that are necessary for a supply, for a transaction to qualify as a supply, is that it should be made by a person in the course or furtherance of his business for a consideration. Correct? Each of these terms have been defined. Person. Section 2, Clause 84 of the CGST Act. Person includes, again an inclusive definition, individual, HUF, company, firm, LLP, AOP, BOI, whether incorporated or not in India or outside India, corporation established by Central Act, State Act, Provincial Act, body corporate incorporated by or under any laws of a country outside India, a cooperative society registered under any law relating to cooperative societies, local authority, central government or state government, society as defined under the Societies Act, a trust, and every artificial juridical person not falling either any of the above. Looking at the definition, can everyone agree that this definition is wide enough to cover almost all kind of charitable entities? And although the seminar is on charitable trusts, I may refer to the term charitable trust, but I am not referring to it as a trust as an entity only. It could be a Section 8 company. it could be a society, it could be any other entity which is undertaking charitable activities. From the GST perspective, that is what I am looking at. So almost all of these things are getting covered. So one clause or condition we are satisfying. Second condition is that it should be done in the course or furtherance of business. Now, this is where majority of the controversy, even under the erstwhile indirect tax regime, has happened. First, we will look at the definition of what is a business. Business under Section 2, Clause 17 of CGST Act. Again, an inclusive definition. Business includes any activity, any trade, commerce, manufacture, profession, vocation, adventure, wager, or any other similar activity, whether or not for pecuniary benefit. So that first and foremost, that argument of a layman that a charitable entity is not in business because they are not doing it for the profit, they are doing it for the service. They are not in it for a pecuniary benefit. The definition of business, clause A, or rather the subclause A itself, says that any trade, commerce, manufacture, profession, vocation, adventure, so on and so forth, whether or not for pecuniary benefit, is also a business for the purposes of GST. Subclause B, any activity or transaction in connection with or incidental or ancillary to subclause A. So, in connection with or incidental or ancillary to any trade, commerce, manufacture, profession, so on and so forth, is also covered by the scope of business. Third, any activity or transaction in the nature of trade, commerce, manufacture, profession, vocation, etc., whether or not there is volume, frequency, continuity, or regularity of such transaction. GST, majority of you know कि GST ऐसा एक भेल है जिसमें पहले का सब प्रोविजन लिया, किधर क्या क्या रेवेन्यू लीकेज है वो देखा, and thereafter they decided that we need to block and seal all these revenue leakages. So we are going to draft it in a manner which is going to cover everything. So one argument that was always made, a one-off transaction where I am not regularly undertaking that transaction in my regular course of business cannot be termed as business. I cannot be termed as a dealer for that purpose under the MVAT Act. They said nothing doing, any activity in the nature of trade, so on and so forth, whether or not there is volume, frequency, continuity or regularity is also business. The Gujarat High Court, under the GST regime itself, has delivered this judgment in Nagri Eye Research Foundation, where they have said that for the purposes of business under 217, it is immaterial whether such trade or commerce or such activity is for pecuniary benefit or not. This was a case where they are doing eye testing and all those things, and they were doing it at a cost. They were not earning any profit. Their argument was, we cannot be termed to be in business because we are not earning any profit out of this. There was an advance ruling, an appellate advance ruling. It went up to the High Court. High Court itself has said that nothing doing. The definition is clear. Whether or not for pecuniary benefit, you are covered. There is one landmark judgment under the Bombay Sales Tax Act. In case of Commissioner of Sales Tax versus Sai Publication Fund. So in this judgment, the Supreme Court held that where the main activity of the trust, now please understand, this judgment is in the context of the Bombay Sales Tax Act, wherein the definition of business was very similar to what it is today under the GST law. This is dealing with subclause A and subclause B, correct? Where subclause A of our 217 states that any trade, commerce, manufacture activity in the whatever it is, correct? Whether or not for pecuniary benefit. Subclause B says any activity which is ancillary or incidental to clause A. Subclause A is also business. Now, under the Bombay Sales Tax Act, an amendment was made to introduce this subclause B, or a provision in the nature of this subclause B that we are talking about, and after that, this judgment has come. So that is the context of this, where in this particular case, the facts were that this was a trust, Sai Publication Fund, which was made with the primary object of spreading the message of Sai Baba of Shirdi. That was their primary object. Now, in furtherance of and to accomplish this object, what they were doing was they were also publishing books or pamphlets or other literature containing Sai Baba's message, and it was sold at a nominal charge to meet its cost. They were not earning any benefit. Now the idea was that through this literature also we are spreading the message of Sai Baba, but because there is a cost involved, they were only recovering the cost. The sale proceeds of this publication formed property of the trust, which could be utilized only for advancement of the objects of the trust. It could not be utilized. It was put in the objects of the trust itself. There was a specific provision in the trust deed that in the event of failure of the trust to carry on its objectives, the remaining fund in its hands will be handed over to the Sai Baba Sansthan. Now, despite this, the department had held that the sale of this literature amounts to sale of goods, and therefore you need to pay tax on it, the sales tax. The Supreme Court held that, now in this particular case, the argument that was made by the trust was, our primary objective is neither in the nature of trade, commerce, manufacture, adventure, wager, nothing. So where our primary objective, which is spreading the message of Sai Baba, does not get covered by clause A, any ancillary activity in order to achieve the objective in clause A will also not be business, because although we agree that there is an amendment that any ancillary activity, but for that ancillary activity to come under the purview of business, your primary activity has to first be business. That was the argument that was advanced. And the Supreme Court did agree. And they said that the question of profit motive or no profit motive will be relevant only where a person carries on trade, commerce, manufacture, or adventure in the nature of trade, commerce, manufacture. On the facts and in the circumstances of the case, irrespective of the profit motive, it could not be said that the trust was either a dealer or was carrying on trade, commerce, or manufacture. Correct? And therefore, the highlight or the takeaway from this judgment is where the main activity does not fall within the meaning of business, any ancillary activity also should not form. Under GST law, it's not that people have not tried to use this judgment. In our own Maharashtra, there was an advance ruling made in case of Shrimad Rajchandra Adhyatmik Satsang Sadhana Kendra. Okay? At the advance ruling stage, now what the facts were similar. They are asking a question to the advance ruling authority that whether sale of spiritual products such as books, DVDs, etc. will be treated as supply attracting GST. Correct? Their contention is that the money which we are earning from sale of these goods is used for the main object, that is for charitable and religious purposes. We are also spreading the message of some spiritual guide, and therefore these similar provisions are applicable to us. They have cited, they have placed reliance on Sai Publication Fund. They also placed reliance on Gujarat Maritime Board judgment of the Supreme Court, wherein it was held that if the primary or predominant object of the trust is charitable, any other object which might not be charitable, but which is incidental or ancillary is also covered. The advance ruling authority held that there was no specific exemption to registered charitable trust for supply of such goods under the GST law. The sale of spiritual products was incidental or ancillary to the main charitable object of the SSC, and it is to be considered as business, therefore liable to GST. They went to appellate AR. Appellate authority has confirmed the ruling of the advance ruling authority. The last I know that this particular dealer has approached the Bombay High Court by way of a writ, but it has not been decided yet. Okay? Having seen this, by and large, under the GST law, the consensus now, after 7-8 years of GST coming in and settling in, is that these such transactions which are being undertaken, such as sale of certain spiritual material, is covered by the scope of supply, and people are getting registered and paying GST. Correct? The third important aspect that we come to, that it should be for a consideration. Now, consideration has also been defined in section 2, clause 31 of the CGST Act. It says consideration includes any payment made or to be made, whether in money or otherwise, in respect of or in response to or for the inducement of supply of goods or services, or both, whether by the recipient or by any other person. It also includes the monetary value of any act or forbearance in respect of, in response to, or for inducement of the supply of goods or services, or both, whether by the recipient or any other person. Again, a very wide definition. Consideration does not include any subsidy which is given by the central government or state government, and it also does not include any deposit till the time this deposit is applied as consideration. Okay, so this is what I just spoke about. So if you look at the inclusive portion of consideration, you will find that they have aligned with the Contract Act. The terminology that is used is very wide in response to, or for the inducement of any supply of goods or services or both. Correct? On top of it, it is inclusive. Now, from the perspective of charitable entities, what we need to see, one of the major parts that we need to consider is donations. Correct? Whether donations received by charitable trusts will get covered by the scope of consideration. Because we have seen that the other two aspects, if we are undertaking an activity, we are a person, of course, a charitable entity. If an activity that we are undertaking is getting covered by the scope of business, in order for us to understand whether it is getting covered by scope of supply, the last hurdle is consideration. Now, if we are getting a donation, generally what we understand and what is the consensus even under GST is that donations are gratuitous payments. Any gratuitous payment, because consideration by its very nature is quid pro quo. Correct? Consideration, as we understand in the normal circumstances, is the reason for entering a contract. Correct? I supply services to earn the money. All right? So, with that logic in mind, any gratuitous payment that is made without any quid pro quo is not to be considered as consideration, and therefore it gets out of the scope of supply, and therefore it is not liable to GST unless the trust or the charitable entity is obligated to provide something in return for the donation. Then there is a quid pro quo. The CBIC has issued a circular clarifying this aspect in 2019. They say that where the name of the donor is displayed in the recipient institution premises in such a manner which can be said to be an expression of the gratitude and public recognition of the donor's act of philanthropy, and it is not aimed at giving publicity to the donor in such manner that it would be an advertising or promotion of his business, then it can be said that there is no supply of service for a consideration in the form of donation. There is no obligation, that is quid pro quo, on part of the recipient of the donation or the gift to do anything in return which may be termed as supply of service. Therefore, there is no GST liability. However, where all three conditions, at the end of the circular they say that what is not covered by the scope of consideration and what will be not covered by GST, that anything that satisfies all three conditions, namely that the gift or the donation that is made to a charitable organization, 2, that the payment has the character of a gift or donation, that is, there is no quid pro quo, and 3rd, that the purpose is philanthropic, that it leads to no commercial gain and it does not lead to any advertisement, then GST is not leviable. I hope this part is clear. One notable advance ruling in terms of consideration under the GST law, again Maharashtra advance ruling in 2022, where appellant received grants from the government under a one-stop crisis center scheme to render services to destitute women who are litigating divorcees or homeless or victims of domestic violence. Then the advance ruling authority said that the said activities or transactions undertaken by the appellant could not be construed as supply in terms of 7(1)(a) as there is no element of consideration involved. All right. Now, to sum up the discussion till now, we have identified that we need to satisfy 3 criterias for us to fall under the scope of supply. First one, that the charitable entity has to be a person. Is it a person? Yes. Second, the activities undertaken should be covered by the scope of business. We saw that majority of the activities are getting covered. Thirdly, that they should be for a consideration. We've seen that in case of gratuitous donations, it is not covered by consideration, but where even cost is getting recovered, it is nothing but consideration. So where all three ticks are coming, then we are liable to GST, even if we are a charitable organization, subject to certain exemptions which have been specifically granted. Correct? But as we all know, that exemptions have been granted under the powers taken under section 11 under the CGST Act. That activity still is a supply, but for policy reasons, the government has decided that we'll grant you an exemption for this. Let us look at what these exemptions are. Firstly, we come to the exemption in relation to charitable activities. Notification number 12/2017 Central Tax Rate dated 28th of June 2017 is the mega exemption notification under the GST law for the purposes of services. Okay? Now in this, the very first entry is exemption in relation to charitable activities. The criteria for obtaining this exemption or getting covered by this exemption is twofold. One is that the services should be provided by an entity which is registered under section 12AA or 12AB of the Income Tax Act 1961. Correct? So here there is intermingling of the GST and the income tax law. You can avail of this exemption only if you are registered under 12AA or 12AB of the Income Tax Act. And the second condition is that the activity that you are providing, it should be specifically covered by the definition of charitable activities that is given under para 2 clause R of this very notification that I am referring to. So twofold criteria. First, who is providing the service? The entity providing the service should be registered with the Income Tax Act 12AA or 12AB. Second, the activity. Now again, there is now the definition of charitable activity is by and large the same under the income tax law and GST law, but it is not necessary that it will be identical. So something that might be considered as charitable activities under the income tax law may not necessarily qualify. So you need to identify it separately for the purposes of GST Act by referring to this definition of charitable activities under this definition, under this notification. What is this definition of charitable activities? It's too small to view. I will read it out. First part, there are 3 or 4 sections to it. First part, charitable activities, activities relating to public health by way of care or counseling of terminally ill persons or persons with severe physical or mental disability. Second, care or counseling of persons afflicted with HIV or AIDS. Third is care or counseling of persons addicted to a dependence forming substance such as narcotics, drugs or alcohol. This is the first section. Activities relating to public health by way of care or counseling of terminally ill persons or persons with severe physical disability, or care or counseling of persons afflicted with HIV or AIDS, or care or counseling of persons addicted to a dependence forming substance. On a lighter note, I am of the belief that an amendment is required because in dependence forming substances, they are only considering narcotics, drugs or alcohol. Social media needs to be added. It is a big problem. Mobile phones and social media has become a big problem. So the definition is yet to catch up with the society. It will eventually. Now, the second part is activities relating to public health by way of public awareness of preventive health, family planning, or prevention of HIV infection. Please bear in mind, this exemption is categorically for public awareness of preventive health, family planning, or prevention of HIV infection only. Only 3 categories. Correct? The second major part of charitable activities is activities relating to advancement of religion, spirituality, or yoga. We know in India, we are very big on spirituality, religion, as well as yoga. So therefore, any activities relating to advancement of any of these 3 are also considered as charitable activities. Third part, activities relating to advancement of educational programs or skill development relating to abandoned, orphaned or homeless children, physically or mentally abused and traumatized persons, prisoners, and persons over the age of 65 years residing in rural area. And rural area has also been defined to mean the area comprised in a village as defined in land revenue records, excluding the area under municipal committee, municipal corporation, town area committee, cantonment board, so on and so forth. There is a definition for rural area given. What I'm trying to highlight over here is, we all know Supreme Court judgment, Dilip Kumar's case, Dilip Kumar and Associates or Dilip Kumar and Company, that exemptions need to be construed very strictly. A common misconception that I find is that a charitable entity or any person running a school or undertaking activities in relation to education considers themselves to be doing charitable activities. By all means, I respect it, but if you want to get covered by the exemption, please understand that unless you are undertaking activities relating to advancement of educational programs in relation to abandoned or orphaned children or physically or mentally abused or traumatized persons or prisoners or persons over the age of 65 in rural area as defined under the notification, you are not undertaking a charitable activity for the purposes of GST. I hope I have made my point clear. All right. Last part, activities relating to preservation of environment, including watershed, forests and wildlife, is also a charitable activity. So, we've seen the first exemption, which is the biggest exemption that we need to cover, is that a charitable entity or a charitable trust which is registered under 12AA or 12AB of the Income Tax Act and undertaking any of the activities covered by this definition of charitable activities can very well claim the exemption under serial number 1 of notification number 12/2017. Okay? Some advance rulings. Now please bear in mind, advance rulings are only applicable to the applicant and the jurisdictional officer. The reason for covering these is to just give you an idea as to the mindset of the department as to what they think are charitable activities or not. All right? In this case of Polaris Foundation, this was a public charitable trust registered under 12AA of the Income Tax Act, creating public awareness on COVID appropriate behavior, infection prevention and control. They said that this is covered under the definition of charitable activities in clause 2R and will be exempt under GST under serial number 1. So a trust registered under 12AA undertaking public awareness on COVID was considered to be undertaking charitable activities. This case of Dream Runners Foundation, now this particular trust was registered under 12AA. It was engaged in conducting public charitable activities such as healthcare, rural development, women empowerment, education facility, etc., either directly or through various public charitable institutions. In order to raise funds, every year they conduct a marathon named Dream Runners Half Marathon. For this marathon, they collect donations from the participating runners and as well as corporate donations. They use these donations firstly only to satisfy the cost of the marathon, and whatever is the surplus, they either donate it to other charitable institutions or they use it directly for the charitable activities. The question before the authority was whether these donations obtained or taken from the participating runners, whether they are liable to GST. The authority held that the activity of conducting marathon event does not fall under charitable activities. Your other activities may get covered. But again, GST is a transaction tax. We have to see the applicability qua each transaction. So although yes, you are a registered entity, but this particular activity that you are seeking an advance ruling for is not covered by charitable activity, the definition. And though the money collected from the participant may be donated or used for charitable activities, organizing the marathon itself is a separate supply of service by the applicant for the various participants, individuals and runner groups. The money collected from participants is a consideration towards supply of service of organizing a marathon liable to GST. Third, in case of Ecosan Services Foundation, this was an not-for-profit organization registered under 12AA, providing services of sanitation capacity building through training, piloting and demonstration, awareness raising, research and development, open dissemination of knowledge in the sustainable sanitation and water management. The donations or grants that were received from various companies and persons, they were having a question whether GST is applicable. The the ruling was that these activities that the trust is undertaking are covered by the last clause of the definition that we saw, preservation of environment, and therefore these are covered by charitable activities. In this particular case, the trust was established for a community-based research, policy analysis, planning and technical assistance for the purpose of enhancing prevention, mitigation, and management of disasters, and reorientation of relief and reconstruction of to local initiatives. It was registered under 12AA and 80G. They said that these activities also get covered by the scope of preservation of environment, and since you are registered under 12AA, you are eligible for the exemption under serial number 1. We come to the next critical aspect of the definition, activities relating to advancement of religion, spirituality, and yoga. There is a CBIC circular which is covering, which will give you a lot of clarity as to what the CBIC wants to, where they want to go with this. This circular says what is exempt, what is taxable. Okay? First, any fee or consideration that is charged in any form from the participants for participating in a religious yoga or meditation program or camp which is meant for advancement of religion, spirituality, or yoga is exempt, irrespective of whether you call it a fee or a donation. All right? Any residential programs or camps where the fee charged includes cost of boarding and lodging also will also get covered by exemption, so long as the primary and predominant activity, objective and purpose is advancement of religion, spirituality, and yoga. There is an interpretational aspect involved here. So therefore, on this aspect, you do find a lot of friction between the department and the assessees. They say what is taxable? If the charitable trusts merely or primarily provide accommodation or serve food and drinks against consideration in any form, including donation. A lot of cases had come up where they say that we are doing naturopathy, or we are, this is a yoga camp, or, traditional medicine is being advanced. So this is spirituality or advancement of religion or yoga. However, they found that the rates that were being charged, I think I've covered a couple of advanced rulings also. The amounts that were being charged, they were taking them as donations also. But if you choose a single room, this is the amount of donation. A superior room, this. The food is also getting covered. So what they realized is that under the guise of providing a retreat, they are trying to claim exemption under this charitable activities, and therefore this clarification was issued. The last part is activities such as holding fitness camps or classes such as those in aerobics, dance or music do not get covered by activities relating to advancement of religion, spirituality or yoga. These are fitness activities. No place in the exemption for definition of charitable activities. The next aspect, a lot of temples, majority of them are run by trusts. So one of the aspects that they need to consider over here is renting of religious precincts. Please bear in mind what we saw, the charitable activities, I hope they are clear. I have a lot of temple trusts have also come to me for opinions, and I have had an occasion to review their activities. What I realized was that yes, the charitable activities that you're undertaking are different, but a temple especially does get a lot of donation in kind, which is then sold off or auctioned off to raise funds to undertake the charitable activities. Please bear in mind that although your activities may be charitable, they may get covered by the exemption of charitable activities also. But the goods that you are selling or auctioning off are not covered by charitable activities. Although I would very much love for that to happen, because for a very small aspect, the temples are all getting covered by scope of supply and having to register. I have also been informed that a lot of temples are also not registered. Correct? Although they may be required to. Coming to the next aspect, so renting of religious precincts. Please understand, this is covered by the exemption notification, but not under the first para, that is of charitable activities. There is a separate exemption, and that is the reason I'm covering it. So serial number 13 covers services by a person. It could be any person. All right? By way of conduct of religious ceremony. So any person conducting a religious ceremony, such services for a consideration are exempt by way of this exemption entry, not because it's a charitable activity, not because it is advancement of spirituality or religion or yoga. Okay? Second clause, which is very important, renting of precincts of a religious place meant for general public, owned or managed by an entity registered as a charitable or religious trust under 12AA or 12AB. Please bear in mind, again, they have brought out a twofold criteria. Here, who is giving the religious precinct on rent is very important. The exemption is applicable only to those charitable or religious trusts which are registered under 12AA and 12AB, or any body, 12A or 12AB, or a trust or an institution registered under subclause 5 of 1023 of the Income Tax Act, or a body or an authority covered by 1023 BBA of the Income Tax Act. So it is limited to only these categories of entities. When they give the precincts of a religious place, they rent them out and they earn any amount that may get covered by way of exemption. Please bear in mind, they have defined what a religious place means. It means a place which is primarily meant for conduct of prayers or worship pertaining to a religion, meditation or spirituality. General public means body of people at large, sufficiently defined by some common quality of public or impersonal nature. And precincts is an area within the walls or perceived boundaries of a particular building or place, an enclosed or clearly defined area of ground around a cathedral or church. So the third part, the precincts, has not been defined specifically. That is the dictionary meaning, but religious place and general public has been categorically defined. Only when you satisfy all these criteria can you claim exemption of the rent that you are earning out of renting of religious precincts. There is also an exception. Nothing contained in this entry shall apply to renting of rooms. A lot of temples also give out rooms on rent. So if you are renting out rooms and your charges are 1,000 rupees or more per day, then you cannot claim this exemption. Your entire amount is taxable. If you are renting of premises, community halls, Kalyan Mandapam or open area, where charges are 10,000 or more per day, so if you are giving out a hall on rent, if the charges are 10,000 or more per day, then also you are not covered by this exemption. And renting of shops or other spaces for businesses or commerce, which are there in the precinct of temples, if you are charging rent of more than 10,000 per person per month, then also you are not eligible for this exemption. In this particular advance ruling of Gujarat, applicant was registered as a charitable trust under the Income Tax Act. They were providing accommodation to pilgrims who visit Ambaji temple. In terms of the trust deed, rent is collected at the rate of 1,000 rupees per day. Now, they were claiming an exemption, but over here the problem was there was nothing on record to substantiate the claim that all the accommodation is granted to the pilgrims that were visiting the temple. The property was also not owned by the trust which was managing the temple. The trust that was managing the temple was different than the trust that was operating this particular guest house. And even the rooms were not located within the precincts of the said temple, and therefore they were denied the exemption. Next important aspects or the activity that we may say that a lot of charitable institutions undertake are healthcare services. Again, hospitals are by their very nature, in the sense, if you look at the definition of charitable activities, under the GST law, they are not covered by exemption under serial number 1. even if it is run by a charitable institution, any hospital which satisfies the criteria of 74, whether it is a charitable institution run hospital or a private institution run hospital, can claim this exemption. All right? So services by way of healthcare by a clinical establishment, an authorized medical practitioner or paramedics is exempt, provided this proviso was added later. Nothing in this entry shall apply to services provided by a clinical establishment by providing room other than ICU, NICU, CCU, etc., where room charges exceed 5,000 rupees. So now this new thing has come, is that if a hospital is charging for a non-ICU room more than 5,000 rupees per day, they have to charge GST. Second part, services by way of transportation of a patient in an ambulance, other than those specified in A above, is also covered by exemption. Please bear in mind, the definition is for healthcare services provided by clinical establishment. Healthcare services have been defined, clinical establishment has also been defined. Healthcare services mean any service by way of diagnosis or treatment or care for illness, injury, deformity, abnormality, or pregnancy in any recognized system of medicines in India, and includes services by way of transportation of patient to and fro from the clinical establishment, but does not include hair transplant or cosmetic or plastic surgery, except when such surgeries are undertaken to restore or reconstruct anatomy or functions of the body affected due to congenital defects, developmental abnormalities, injury, or trauma. So where your plastic surgery is absolutely necessary to save the life, it is covered. Otherwise, hair transplant, plastic surgery not covered. Please also understand that this is by way of diagnosis or treatment or care for illness, injury, deformity, abnormality, or in case of pregnancy, most important part, in any recognized system of medicines in India. All right? This is what is healthcare. Healthcare also includes transportation of patient. Therefore, that second clause has been entered. I'm sorry, that should have been B, which says that services by way of transportation of patients undertaken by an entity which is not providing healthcare services, may not be a clinical establishment also, they are also exempt. What is a clinical establishment? It means a hospital, a nursing home, a clinic, sanatorium, or any other institution by whatever name called that offers services or facilities requiring diagnosis, treatment, care for illness, injury, deformity, abnormality, pregnancy in a recognized system of medicines in India, or a place established as an independent entity or part of an establishment to carry out diagnostic or investigative services. So our pathology labs are also covered. Am I overloading you with information? Thank you. All right. So it is necessary. I do understand that in some places I have covered the entire definitions, but sometimes it is necessary. I also do understand that lunch is approaching, but considering the fact that I have started late, we'll finish it in the next 15 minutes, if you allow me. Thank you. Yes? No. There is no cap that has been put. There are certain judgments or advance rulings. This was under the service tax regime. I have covered several. You will get this PPT also, so you may refer to them. The primary point that I have tried to make over here is, one part is supply of medicines, because many of you may be dealing with clients who are running charitable hospitals. What you need to bear in mind is any supply of medicines to inpatient through IPD is a composite supply along with healthcare services, and therefore supply of medicines also gets covered by exemption. However, if that hospital is also having a medicine store or a pharmacy which is selling those medicines to OPD patients or a walk-in customer, then that does not get covered by exemption of healthcare service. That is liable to GST as sale of goods. That is one part that you need to understand. The implants that are used, the consumables that are used For that matter, there is an advance ruling which says that the food supplied to patients and relatives is also covered as part of healthcare services, because there is a concept of composite supply under GST. So services which are naturally bundled in the ordinary course of business supplied together get covered. Principal supply is healthcare service, that is the intention of the service, and therefore they are covered by the exemption. You also need to understand that a lot of people have tried, I have already covered this, that under the guise of there is a naturopathy retreat that I am having, where I provide, some alternative medicine, that is I am trying to, and they tried to claim exemption under as healthcare service. Please bear in mind, that is why I have highlighted that a recognized system of medicine in India, if it is not getting covered by that, you will not be able to claim this exemption. Such people are, in my opinion, better off trying to get themselves covered, if they are trying to get covered by exemption, by way of advancement of spirituality or religion or yoga, if at all they can cover themselves. But healthcare, it is very difficult. So these are the advance rulings which you may refer to. Next is services by rehabilitation professionals as at rehabilitation centers. So these are rehab professionals. You have a separate act which defines what is a rehabilitation professional. He is an audiologist or a hearing aid or ear mold technician or rehabilitation engineers or technicians, so vocational counselors. These may not be doctors, but there is a separate 74A exemption entry. So any person, charitable or not, who is providing these, so there is one aspect, a professional who is a rehab professional providing his services himself may get covered. Next, you need to understand that services by way of by rehabilitation professionals, by way of rehabilitation at medical establishments, which we have seen, or educational institutions, or rehabilitation centers which are established by either the state government, central government, or an entity registered under 12AA or AB. So service by a rehab professional at a medical establishment is exempt, educational institution is exempt, and in case of rehab centers, those rehab centers should be run by an entity which is registered under 12AA or AB. All right? Next important aspect, an activity commonly undertaken by charitable institutions is a school or a college, educational institution. Again, like I said, does not get covered by charitable activities definition of GST. There is a separate exemption entry 66 under the notification 12/2017. The exemption is services provided by an educational institution to its students, faculty and staff. So any services provided by an educational institution to students, faculty and staff is exempt. Again, the condition is that the institution that is providing the services should get covered by the definition of educational institution under this notification. It defines an educational institution to mean an institution which is providing services by way of preschool education or education up to higher secondary or equivalent, education as part of curriculum for obtaining a qualification recognized by any law by the time being in force, or education as part of an approved vocational education course. So if the entity is getting covered, please bear in mind, irrespective of whether the entity is a charitable entity or not, if they are getting covered by the scope of educational institution in this notification, then all services provided by them to their students, faculty and staff are exempt. Similarly, services provided by an educational institution by way of conducting an entrance examination against consideration in the form of entrance fee is also exempt. There are a lot of charitable institutions who are running schools or colleges. A question that had come up for me for an opinion was sale of admission forms. So for a long time it was believed that that does not get covered by exemption under serial number 66. So a lot of schools and colleges were paying GST on the sale of admission forms, because the understanding was these are not services provided to your students. Unless they take admission, they cannot be called as students. But thereafter, CBIC came up with a circular with a clarification. They've also entered this entry. Again, the interpretation was this is only for conducting entrance examination, not for sale of forms, but then that clarification, the circular that was issued clarified that even sale of admission forms to prospective students is also covered by this exemption entry, so you need not pay GST on those as well. Last part, any services that are provided to an educational institution by way of either transportation of students, faculty or staff, or by way of catering, including any midday meal scheme sponsored by the central or state government, or any security or cleaning or housekeeping services performed in such educational institution, or services relating to admission to or conduct of an examination by such institution, or by way of supply of online educational journals or periodicals to such educational institution is exempt. I will not go into the intricacies for the shortage of time, but this is also an entry where a lot of controversy does happen, correct? Because first, the entity that the services are being provided to must qualify as an educational institution, one. Number two, we come across a lot of cases where the school is being run by one entity, the mess is being run by another entity. Now, how the transaction is structured is very important. Many a times, the entity running the mess is recovering the amounts directly from the students, and there might be a separate arrangement between the school and the entity. Now, in that particular case, if you are not providing catering services to the school, but you are providing catering services directly to the students, you cannot get covered by exemption. The arrangement that you have with the school is nothing but using their premises. That's a rent, correct? Therefore, where such transactions are happening, after GST has come in, a lot of restructuring was required in order to make it more tax efficient, where the catering services, if they are provided to the educational institution, they enjoy the exemption, not otherwise. All right, so there are a lot of certain other issues that are there. I subscribe to the view now that do keep a full day seminar only on the income tax and GST aspects of it, then we can discuss it in further detail. Other notable exemptions, these are activities which are normally undertaken or might be undertaken by your charitable institutions. Running of old age homes by an entity registered under 12A or AB of the Income Tax Act, provided that the consideration does not go beyond 25,000 rupees per month per member, and this 25,000 should include charges for boarding, lodging and maintenance. So if you are satisfying all these conditions, you are an entity registered under 12A or AB, running an old age home, and you are charging consideration all inclusive less than or equal to 25,000 rupees, you are covered by exemptions under 9D. Again, please bear in mind, this does not get covered by charitable activities. Next, services of public libraries by way of lending of books, publications or other knowledge enhancing content or material is also exempt. Services by specified organization in respect of religious pilgrimage facilitated by the government of India under bilateral arrangement, they are also exempt. Services by way of public conveniences such as provision of facilities of bathroom, washrooms, lavatories, urinals or toilets are also exempt by a separate entry. Services by an unincorporated body or a non-profit entity registered under any law for the time being in force to its own members by way of reimbursement of charges or share of contribution either as a trade union or for provision of carrying out any activity which is exempt from levy of GST is also covered by exemption. Services provided by an unincorporated body or a non-profit entity registered under any law for the time being in force engaged in activities relating to welfare of industrial or agricultural labor or farmers or promotion of any trade, commerce, industry, agriculture, art, science, literature or social welfare, charitable activities or protection of environment. Services by such institutions to its own members against consideration in the form of membership fee up to an amount of 1,000 rupees per year per member is exempt. Lastly, services by way of training or coaching in recreational activities relating to arts or culture by an individual or by way of training or coaching in sports by charitable entities registered under 12A or AB are also exempt. Earlier both the activities used to get covered by both, either an individual or charitable. Then they made an amendment in 2022. Now they say that activities relating to arts or culture by individual are exempt, and activities in training or coaching in sports by charitable entities only are exempt. An additional exemption is there under the IGST law, because under the IGST Act, any services from an entity located outside India by an entity registered in the taxable territory is an import of service liable to tax, whether or not in the course or furtherance of business. In that case, they have given a special exemption saying that services received from a provider of service located in non-taxable territory by an entity which is registered under 12AA or surprisingly, when 12AB came, in the notification number 12, everywhere they made the changes 12AA or 12AB. This notification, if I'm not mistaken, still remains unchanged. It only talks about 12AA. Okay, might be oversight. For the purpose of providing charitable activities, this exemption does not apply to OIDAR services, but your client need not worry, because any entity providing OIDAR services from outside India to an Indian entity is required to obtain registration, provided the recipient is an unregistered entity. So if you are getting covered by exemption, you need not worry, because then the OIDR will have to pay, the service provider will have to pay the tax. If you are anyway registered under GST, then RCM provisions apply to you. In case of hostel accommodation services, a lot of charitable entities are providing hostel accommodation for working women or working individuals or students or any other categories. There has been a lot of up and down. Earlier, now please understand, first and foremost, circular of CBIC says that hostel accommodation services do not fall under charitable activities. It is not getting covered. Okay, one part is clear. Second is, they say that hostel accommodation provided by a charitable institution or any other institution, it is nothing but accommodation service. So exemption in relation to accommodation service equally applies to hostel accommodation provided by a charitable entity also. Earlier, there used to be an exemption where your per unit per day rent was less than 1,000 rupees. Correct? A lot of schools which were providing lodging boarding facilities, running hostels also were getting the benefit of this, that because the charges were 1,000 rupees per day per unit. Okay? So that exemption was there. Later on, they thought that, or they realized probably that this exemption is being misused. They removed the exemption. From rupee 1, everybody had to pay tax at 12% first. Then recently, in July 2024, because of representations were made that this is causing a lot of problem, because after that accommodation thing was removed, a lot of religious trusts went to them saying that these dharmshalas that we are running, what about them? They said, why are you worried? Because renting of religious precincts we are already covering by way of separate exemption. So long as it is covered in your precinct, you are still covered by the exemption. If it is not, then I'm sorry, you will have to pay the tax. Now they say that accommodation services will be exempt if, again, twofold criteria, the value of supply is less than or equal to 20,000 rupees per month per person, and the stay should be a minimum of continuous period of 90 days. Okay? So if you are staying for minimum 90 days at a stretch, and the amount that is being charged to you is less than or equal to 20,000 rupees per person per month, then you can claim the exemption of accommodation services. If it exceeds, then you will have to pay tax as a regular hostel or a hotel. All right? So this is the summary that I have given to you as a snapshot. There is an advance ruling also covering it. I have covered the entire aspect. Now we come to the part of supplies made free of cost. Anything that is supplied by a charitable institution free of cost, be it goods or service. If there is no consideration, either in money or non-monetary consideration, if it is supplied entirely free of cost, like we saw, section 7, if there is no consideration, it is not a supply at all, therefore no GST. However, where such supplies fall under Schedule 1 of the Act, there is a Schedule 1 which prescribes that activities falling under this schedule made without consideration shall be deemed to be supply and will have to be valued in terms of section 15, subsection 4. So if your activity is falling under that, one of the example is related party transactions. I have given 2 examples over here. Any permanent transfer or disposal of a business asset where ITC was availed on such asset, even if there is no consideration for this disposal or permanent transfer, it is deemed to be a supply. Secondly, supply of goods or services made between related person or distinct persons. If that is the case and no consideration is charged, still it is covered by the scope of supply. So that needs to be borne in mind. What is the impact on ITC? Say that you are a charitable institution registered under GST because your activities are falling under the scope of supply, you are paying GST. Certain activities, again, GST is a transaction based tax. Every transaction that you are entering into, you have to look it from the lens of whether this is getting covered by exemption or it is taxable. Let's say some of the activities that you are undertaking are exempt, some of the activities that you are undertaking are taxable. Now where your turnover includes both taxable as well as exempt supplies, section 17 subsection 2 of the CGST Act read with rule 42 and 43 of CGST rules come in. So in relation to the proportion of taxable supplies, you have ITC available. For exempt supplies, ITC is not available. There is a formula prescribed for proportionate reversal of ITC. What are the registration requirements? Last part. If you are exclusively supplying goods, the registration limit in Maharashtra is 40 lakh rupees. There are certain special category states where the registration limit is 20 lakh. If you are providing goods as well as services, and in case of most charitable institutions, they will be providing goods as well as services or entirely services, then in that case, the limit is 20 lakh rupees, and in case of special category states, 10 lakhs. Please bear in mind, in order to calculate the aggregate turnover threshold, the aggregate turnover will include your taxable as well as exempt supplies, including supplies which are not leviable to GST. The supplies that are not leviable to GST are those 5 supplies: alcoholic liquor for human consumption, petroleum crude, diesel, petrol, okay, natural gas. So the reason that majority of all of the petrol pumps are also registered in GST, 99% of their turnover is of petrol and diesel. 1% of their turnover, which in most cases is less than 20 lakh rupees also for the entire year, is of, say, additives or oil or accessories, or some may have service centers. But they are still required to get registration, obtain registration under GST. That the reason is that your aggregate turnover includes everything. Thereafter, on that portion which is not leviable to GST, you need not pay tax, but you will have to still be registered, pay tax on the taxable portion, file the returns. Persons who are engaged exclusively in the business of supplying goods or services that are wholly exempt. Let's say that all of the activities that your client is undertaking are getting covered by one or the other exemption entries that we just discussed. All right? In that particular case, your entire turnover is exempt. Section 23 says that if your entire turnover is exempt, you need not obtain registration, even if your turnover is going beyond 20 lakh rupees. Last part, provisions relating to section 24. There is a section 24 of the GST Act which talks about compulsory registration. So there are certain scenarios where you make a taxable supply, which is an interstate supply, even rupee 1, you qualify for being registered. If you receive any inward supply of services or goods which are specifically provided to get covered by reverse charge, then in that case also you may be required to obtain registration and pay the tax under reverse charge. With that, I once again thank the organizers. I thank all of you also for a patient hearing. Thank you very much. If the organizers want for 5 minutes, if you want,
we are already late. So
yeah, no, I am willing to answer the questions.
But that we'll do informally because abhi lunch time hi hai.
Yeah,
so we'll do informally outside.
I've got another session after lunch.
But it's
upstairs.
already. We'll take one question. एक gentleman ने हाथ उठाया.
Yes, sir. Sorry? Okay. Donations, if they are plain donations without anything in return, they are not consideration at all. So there is not a supply at all. So aggregate turnover has to be calculated of supply of taxable or exempt turnover. If your only donations you are considering, then no, you need not consider them. Which interest you are talking about, sir? Interest on deposits? Interest of deposits is considered to be an exempt supply for the purposes of GST. So technically, yes, you need to consider that in your aggregate turnover. There I have been advance rulings also to this effect, where a person had said that I have interest on loan, interest on deposits, and then only a minor portion I am renting out a residential property. Everything was covered. There is one, I think Gujarat advance ruling is there, where it's a masterclass on what the department is thinking about all these items, where they say that deposits, interest against fixed deposits or deposits is consideration, but it is an exempt supply, and therefore for the purpose of aggregate turnover it has to be included.
Yeah, thank you very much. I request everyone to please. Okay.
Thank you.
And as we are